I'll come back. Our next topic will be on manufacturing. Sometimes we refer to this as cost accounting because we have to calculate the cost price of the products that we manufactured, that we make, in order to determine how much profit we must add to that to determine the selling price. So let's look at manufacturing. We have three different types of businesses. The service enterprise, that was done in grade 8, where we deliver a service, we receive money for that. We clean the house, we receive the money, we deliver a service. Trading enterprise, this is the one that we normally use. Most of the time we buy and sell. We buy goods at a certain price, a cost price, and we sell it at a higher price, the selling price. And then the third option will be the manufacturing enterprise, and that is where we are now. We must first make the product and then we sell it. So we must calculate the cost of production, and then we can add our profit and then we sell it. So this is the whole purpose of these accounts, is in order to calculate the cost of production. The costs involved in production will be your material cost, it's your labor cost, we have the factory overhead costs, we have the admin costs, and also sales and distribution cost. And then we know that these three will influence the cost of production. What happens in the office doesn't influence the cost of production. What happens in the sales and distribution, the marketing, or the selling of these goods will not influence the cost of production, but it is still costs in the business. If we look at material and labor cost, we have direct material and we have indirect material. The direct material will be the material that is visible in the final product. If I manufacture desks, wooden desks, obviously I know exactly how much wood I need per desk. So that's direct material. But the glue that I'm going to use, or the varnish, I don't know how much I'm going to use per desk. Therefore, we refer to that as indirect material. Labor, we also have direct labor and indirect labor. Direct labor will be the labor of the people working on the product, making the product, manufacturing it. And then the indirect labor will also be people working in the factory. They are there, but they're not busy making. They are cleaning, or they will be the supervisor. That will be referred to as indirect labor. Factory overheads, we start with indirect material, for in case we forget that, and indirect labor. We've just done that. Indirect material used, but we can't say exactly how much per unit produced. And indirect labor, people working in the factory but not involved in making. They are not paid per item produced. Then we have the other overheads, the depreciation on factory equipment, the repairs on the factory equipment, insurance on the factory equipment, water and electricity, and then very often they will give you a percentage, or this will be paid according to the floor space occupied, the same with the rent expense. The rent that will be allocated according to the floor space by the factory and the admin. Calculations that we have to make, direct material plus direct labor, we know will equal prime cost. If we take the prime cost and we add the factory overheads, then we get the total production cost. But then we started the year with semi-finished goods, work in progress that we haven't finished from the previous year. So obviously we will finish that first. And at the end of the year, we still have unfinished or semi-finished products, and that we will subtract in order to get the total cost of production of finished goods. And this is our aim. This is what we try to calculate. And this will be calculated in your work in progress account. And this will next year be shown in the production cost statement. So it's important that you see what you are calculating in this account. We're going to look at some accounts later on, and then you will understand. So direct material, direct labor, prime cost. We add the factory overheads, we get the total cost of production, we add the work in progress at the beginning, we subtract the work in progress at the end. Fixed cost versus variable cost. Fixed cost, there you see the fixed cost. Stays the same, irrespective of the number of items produced. Those are the units produced. Fixed cost stays the same. That will be your factory overheads and your admin cost. Variable cost will be your direct material, direct labor, sales and distribution cost. There's your variable cost. As we produce more, these costs will increase. The more I produce, the more wood I need. The more the workers make, the more their labor will be, because we pay them per desk or per item produced. And then sales and distribution cost, the more I travel, the more the cost. The more I advertise, the more the cost. So fixed cost that stays the same irrespective of how much I produce. If I have to pay 5,000 Rand for rent expense, that's a fixed cost, because it doesn't matter how many items I produce, I must still pay the 5,000. Whether I produce one item, 1,000,000 items, or nothing, I must pay the rent expense. So that is fixed cost. The same with admin cost. The salary of the secretary in the office will be paid, will be fixed, irrespective of how many items produced. While variable cost will vary according to the number of items produced. That's also a very popular question to ask. Explain the difference between fixed cost and variable cost. Break-even point, always asked to calculate or to verify. This will be grade 11, this will be in grade 12. What is my break-even point? That is where I make no profit or loss. In other words, I break even. I cover my costs. If my production and sales are more than the break-even point, then I'm going to make a profit. And if my production and sales is less than the break-even point, then I make a loss. And here you can clearly see it. If that is the break-even point, everything less than that, produced less than that, will be a loss. If I produce more than the break-even point, I'm making a profit. And that's why it's important to calculate this, to know how many items I must produce before I start making a profit. Because if I produce less than that and sell, remember, it doesn't help we produce and we don't sell it. Produce and sell. If I sell less than that, then I'm making a loss. Ledger accounts. In grade L11, we do the ledger accounts. So please know the formats. And then in grade 12, we take everything that we did here and we put it into a production cost statement, which will actually be your work in progress account, just in a statement format. So this is where we're heading in grade 12 with this work. Okay, we're going to look at the activity where we do these ledger accounts. So activity 3, page 14 and 15 in your activity books, and then page 12 and 13 of the answer books. So let's do some of those accounts. This is information given on Nkosi, the owner of the business of the clothing factory shop, and they produce and sell tracksuits. And then they give us the information. What we have to do is those 4 accounts. We have to show the raw material stock account, work in progress, finished goods, stock account as well as the factory overheads with all the information. Information A, please always just make sure from where to where you are working. 1st of March is the opening balances, the 29th of February 2020, the closing balances. Now they gave us all the balances except for finished goods. They did not give us the closing balance. So before we start, we can put in the balances. The balance for raw material stock was already entered. Work in progress given as 223,700 opening balance. The closing balance was also given 445,450, and we know that will be the balance brought down March the 1st. 445,450. Here, raw material stock account, they also gave us the closing balance, 251,000, which will be the opening balance for the next year. When we get to finished goods, they only gave us the opening balance, 569,500. They did not give us the closing balance. So that's your first step. You bring down your opening balances. Finished goods, trading stock. So it must be a debit balance. It's an asset. Work in progress, that's your semi-finished products. That's also an asset. That's why a debit balance. Your raw materials, the materials that you have, asset, debit balance. What I meant by format, when you look at the raw material stock account, you start with the balance, then you add everything that you purchased as well as the carriage on purchases, and then you issue it to the factory. We can see this work in progress as what is happening in the factory. So in the factory, we put everything together. We take the semi-finished goods that we had at the beginning, we add material, we add direct labor, we add the factory overheads, and then when we subtract what the semi-finished goods that we have at the end, then we have the finished goods that we completed during this year, and that will be available to sell at the end of the financial year. So now we go to the information that they gave us. We've already written in the balances. Now they give us the transactions for the year ended. Purchases on credit of raw materials. I purchased raw materials on credit. There's the indirect materials purchased, and here is the carriage on purchases of raw materials. So those two will be used in the raw materials stock account. Creditors, 950880. Carriage on purchases, paid 47,500. That was for carriage, it was paid cash. Then in information C, the bookkeeper forgot to record an invoice for raw materials purchased, 300,000. So that is what we purchased at the beginning, given there, the 950,800. But there was a 300 that was not included there. So we must still include that, and then it says a 25% trade discount was received. So our raw materials will increase 300,000, but we received a 25% discount, so we only paid 75%. So that will be a total of 225. And then the total purchases, 1,175,800. And now I can finish this account because I know I started with 164. I purchased what they gave me plus the adjustment, and this is the carriage that I paid. They didn't tell me how much I issued to the factory, but they did tell me the closing balance. So if I have the opening balance plus everything that I purchased minus what I have left, where's the rest? I've sent it to the factory. So that is work in progress. This will be your balancing amount, 1137,100. If we add up, this will give us 1388,100. So we just balance that account in order to calculate the balancing amount, and that will be the raw materials that we issue to the factory. So this will be shown in this account. Method mark because we've done the calculation there. Now for the work in progress, we need information on direct labor. They didn't ask us the account, so we must do some calculation for the direct labor. Information 2, they give us something on the indirect materials. Information 3 is on salaries and wages. The salary of the factory foreman, 216, but we know that is indirect because he is not busy making the product. Summary of the factory workers, these are the people busy making the products. The deductions given, the total deductions, employer's contribution, as well as the net wages. Now we know that the gross wages minus the deductions will be equal to the net wages. Now cost to company will be the gross wage. So we're looking for the gross wages, not given here. But they did give us the net wages and they did give us the deductions. So if I add the net wage plus the total deductions, that will give me the gross wage. And then we also know the contribution is also cost to company. So cost to company will be your gross wages plus your contributions. And then they give us something there again on the indirect wages. So if we write that in our account, direct labor, 228,400, which is the total deductions, plus 844,600, which is the net wages, plus the contribution 97856. So there is our direct labor. And please show your calculations there on the account itself. Now for factory overheads, we can't complete this without the factory overheads, but this is an account that we have to do. So if we go down to the factory overheads, we see we start with indirect material. Yes, they did give us information. If you remember correctly, they did give us the opening balance of the indirect material, 9,800. They gave us the purchases of the indirect material, 39,800, minus the closing balance of indirect material, 7,300. The way that we calculate indirect material is exactly the same as for direct material. The opening balance plus purchases plus carriage minus the closing stock. Now just to show you where I got that from, there is the indirect material, opening balance, closing balance, and there is the purchases of the indirect material. So that is where I got that information from. And now they say in information 2, they tell us that 2/3 of the indirect material were issued in the factory. The rest was used in the office. So of that amount that I just calculated, 2/3 will be used in the factory. So only 2/3 can be shown in the factory overheads, 28,000 200. Indirect labor, they did give us information on the indirect labor. 6 casual workers cleaned the factory, 50 rand per hour. And they've worked 192 hours. And then 3 of them worked 40 hours of overtime at the normal rate plus 50%. So if the normal rate is 50 rand, then the overtime rate will be 75. The 50 rand plus half of that, plus 25 of that to give you 75 will be the rate for overtime. Again, show your calculation on the account itself. Factory overheads, indirect labor. They said we had 6 workers who work at 50 rand per hour, and they worked 192 hours in total. 3 of them worked 40 hours overtime at 75 rand per hour. 50 rand plus 25. So the total indirect labor, 66,600. And now for the rest of the information, I have to read again. They tell me that rent expense includes rent for March 2020. Our year's ending on the 28th of February, 29th of February. So we've received 1 month in advance. They said there was no increase in the rent during the financial year, and the rent is proportionally allocated to the various departments according to the floor space occupied. The factory occupies 600 square meter. Out of a possible, if we add that, 6, 7, 8, 9 out of a possible 1,000 square meters. Rent expense. Now we're looking for rent expense. There we have our rent expense. Rent expense, 130,000. But that 130,000 was received for 13 months. So we must multiply by 12, divide by 13. We must subtract that 1 month that we've received in advance. And then we must multiply by 600, divide by 1,000. While we are here, they also show us depreciation for the factory equipment. That must also be shown on the factory overheads account. Then you see this one, advertising. And again, the red lights must go on, because advertising has got nothing to do with the production cost. So no, we are not going to show that anywhere. We just ignore that. And then we had the salary of the 4 factory foremen, that 216,000, that we must also show on the factory overheads. That will be part of the overheads. The rent expense we must calculate, and we can add the depreciation. So if we go down to the factory overheads, factory foreman, the salary of the factory foreman was given as 216,000. A depreciation was given, so we don't have to calculate anything there, as 5,6,250. And then we do have to calculate the rent expense. The rent expense was given as 130,000. But that was for 13 months. We only want to calculate 12 months. And when we calculate that, only 600 out of the 1,000 possible square meters will be allocated to the factory, and that will give you a 72,000. The 130,000 total, but that was for 13, so divide by 13, multiply by 12, and then 600 out of a possible 1,000 square meters. Now we're done with this one, so we can add 4,390.50 4,390.50, and that will be the amount that we transfer to the factory. This is the total factory overheads that we will take to the factory. And the factory is our work in progress account. And we've calculated that 439,050. And now we can complete this one because we've got the opening stock. We've got that. That will be our balancing amount. So we add 2,970,706, 2,970,6 minus the balance at the end will give us 2,525,256. And this is now the cost of production of finished goods. This is what I actually wanted to calculate, and that will be transferred to the finished goods account, because this is how many products or the value of the products that I produced. 2,525,256. And now I get stuck because in the finished goods stock account they didn't give me the closing balance, but they did give me sales, and they did give me the markup percentage. Markup percentage 60%. Just going to show you where I found that. In the information given, there right at the bottom, sales profit margin of 60%, and there's our sales. So we can calculate cost of sales. So then we don't need that closing balance of the finished goods. Cost of sales, sales given 4,071,28208 times 100 divided by 160 to give me the cost of sales, 2,544,505. And then I can calculate, balance this account, 3094756. Two totals must be the same, 94756 minus cost of sales in order to give me finished goods at the end. What I end with, I did not sell that, so that is what I still have on hand. Just to take you back to the factory, the work in progress account, we said that direct material plus direct labor, that is your prime cost, plus factory overheads, that is your total cost of production. Then we add semi-finished goods at the beginning, we subtract the finished goods at the end, those things that are not finished yet, and what do we have? We have the cost of production of finished goods. And this is what we are trying to calculate. This is what we are going to calculate in the production cost statement next year. So please know your formats, know what goes where. The second part of this question, fast movers, factory shop. They give us information, total units produced and sold for the previous year, for the current year, the break-even point in units, selling price per unit, total variable cost, total fixed cost. And they ask us to calculate the break-even point. And that is something they always ask it. So please make sure that you know how to calculate break-even point. That will be on your formula sheet, but it will not indicate it as the break-even point. You must know. Break-even point, total fixed cost, divide by the selling price per unit minus the variable cost per unit. So I must still calculate the per unit cost of the variable cost. Now, if that is the total variable cost, divide by the number of units, the 12,000, then the variable cost per unit is 170. So now I can do my calculation. 602,000, the total fixed cost, divide by the selling price per unit minus the variable cost per unit, and that will give me 6,120 units. Not rands, not cents, not percentage, not days, not months, but units. Fixed cost, sales per unit, selling price per unit. This can maybe 2 marks because you had to calculate that. So this can be up to 5 marks for that easy calculation. The last question, Patrick is satisfied with the break-even point. Explain. Quote figures. Whenever you calculated the break-even point, then you compare the units produced and sold with the break-even point. So what does this mean? We had to produce and sell 6,120 units in order to break even. We've produced and sold 12,000 units. So obviously, Patrick can be satisfied because he sold more than. He sold 5,880 units more than the break-even point. So he made a profit. If you compare that with last year, the previous year, the break-even point was 7,000. And the total units sold was only 9,000. So they only sold 2,000 units more than the break-even. So they only made profit on 2,000. This year they're making profit on 5,880 units. So if you write that down, the break-even point decreased. That means we have to produce less in order to break even. The business is producing and selling 12,000 units, which exceeds the break-even point, and there it exceeds the break-even point by 5,880. So we are making a profit on those items. This is not an amount, this is units. So we're making a profit on almost 6,000 units, while last year we only made a profit on 2,000 units. That is all for manufacturing. Manufacturing also one of those topics that you do in grade 11 and it continues in grade 12. Very nice topic. So please make sure you understand, you know how to do your ledger accounts, study the formats, and make sure you know how to calculate your break-even point.